Anyway, Tom Piotrowski over at CommSec. How are we shaping up today?
Pete, we're going to see another conservative start to trade today. The futures are pointing to a slight gain at the start of the session. And I suppose it reflects the generally pensive atmosphere where Northern Hemisphere equity markets are concerned. There is not any anxiety, but there is a pensiveness at this stage. So that saw the US markets sell off in the early part of their session. They were down in the order of around 0.75% at their worst and were able to recover to be largely flat. Small improvements for the Dow and the Nasdaq. The S&P 500 was flat, but there was some important economic news last night in the form of jobs numbers. This is a private measure of jobs growth called the ADP report, but it was much better than what the market had anticipated, and it was the strongest outcome that we've seen in about 3 months. What that means is that conversation about bigger rate cuts in the near term from the Fed have been wound back considerably. So there's still a 1 in 3 chance in the eyes of the market that there'll be a big rate cut of 0.5%. But if we see more employment figures throughout this week that suggests that it is strengthening the employment market, that'll tend to scotch that possibility. But nonetheless, that was encouraging to have that glimmer of good news. Company news included Nike pulling back on its sales forecast or earnings forecast. Markets don't like that, but this is ahead of an incoming CEO. Nonetheless, it pushed the shares down by around 5%. Tesla shares were down by 3%. They were just a little bit shy of the market's expectations in relation to vehicle sales for the last quarter. As I said, a small gain for the local market this morning at the start of trade. Energy stocks remain well supported, even though we saw a bigger build in US oil inventories last week, which put some downward pressure on prices. The Aussie dollar is trading at around 68.8 US cents.
All right, Tom, thank you.